Welcome to the NOSR Webs podcast, where we take dense research and turn it into a knowledge party you actually want to attend.
Hopefully.
Today we're diving into the crystal ball, examining DYDX price predictions.
All right.
It's like having a team of analysts whispering secrets directly into your ear.
Except without the hefty consulting fees.
Right.
And the awkward elevator music in the waiting room.
Exactly. Plus, we'll throw in some witty banter for free.
They're free.
But before we get swept away by the promise of riches, remember to hit those links in the description.
Yes.
For some truly amazing offers.
Amazing offers.
Now let's talk DYDX. It's a decentralized exchange on the Ethereum blockchain. Basically a playground for derivatives and other fun financial tools, all without a central authority.
Wild West of finance-only digital.
It's like the Wild West of finance-only digital.
Yeah.
And as with anything in the cryptosphere, volatility is the name of the game.
Oh, yeah.
That's why we're sifting through a stack of predictions, analyzing both the numbers and the logic behind them.
Think of it as a weather forecast for your crypto portfolio.
Oh.
We're looking at different models, historical trends, and even a bit of that chaotic energy that makes crypto so unpredictable.
Just to give you a taste of the spread, we've got predictions ranging from mildly optimistic to hold on to your hats levels of bullishness. So there's something here for everyone, whether you're consciously dipping your toes or ready to dive headfirst into the deep end.
I like it.
Okay, let's unpack this. As of December 2024,
Okay.
DYDX is chilling at $2.13 with a market cap of $245 million.
And let's not forget that recent price action, a 12.87% jump in just a week. Could this be a sign of things to come or just a fleeting sugar rush in the market?
Ah, the eternal crypto conundrum.
Yeah.
Well, CoinStats, our resident optimist, seems to think the good times are rolling. They're predicting DYDX could climb as high as $2.80 by the end of 2024. That's a healthy increase, no doubt. But then we've got wall investor and trading beasts playing it a bit cooler, suggesting a range between $1.56 and $1.76. Clearly, someone's got their rose-colored glasses on while someone else is reaching for the antacids.
You know what they say? One person's trash is another person's treasure?
So what's with the difference in opinion? Are they looking at the same data through different kaleidoscopes?
That's the beauty of it. CoinStats may be putting more weight on recent market momentum, perhaps interpreting that recent price surge as a signal of continued upward movement. It's like that friend who buys a lottery ticket and already starts planning their retirement.
Okay, so short-term trends over long-term outlook. What about the more conservative voices? What are they seeing that makes them a bit more hesitant?
Well, they might be factoring in historical patterns or broader economic factors that could rain on the crypto parade. You know, the kind of friends who remind you that you haven't actually won the lottery yet?
Right. It's not just about the numbers. It's about the story they tell. What assumptions are baked into these predictions? What hidden currents are they riding on?
Precisely. And it underscores the importance of diversifying your information diet, not relying on a single source or single type of analysis. A balanced portfolio applies to knowledge, too.
Now let's gaze into the mists of time, shall we?
All right.
What's the long-term outlook for DYDX? What does the year 2025 and beyond hold?
Most sources seem to agree on a general upward trajectory, though the intensity varies. By 2025, we're looking at a potential climb to around $3.50, and if the stars align, 2026 could see DYDX pushing past the $6 mark.
If the stars align, you say?
Yes.
Sounds like there are some pretty crucial celestial bodies at play here.
A surge in DeFi adoption would certainly help. More users, more trading volume, that all adds fuel to the DYDX rocket.
And let's not forget the regulatory landscape.
Yeah.
A more crypto-friendly environment globally could be a game changer, attracting those institutional investors with their deep pockets.
Indeed. And technological advancements within DYDX itself would also play a major role. New features, expanded capabilities, anything that gives it an edge in the DeFi arena.
Now, for those who like to get up close and personal with their data, Changelly has a month-by-month breakdown of price predictions from 2024 to 2026. They've even calculated potential ROI percentages, which are, let's just say, enough to make your heart skip a beat or two.
Of course, high rewards often come with a side of high risk. It's important to remember that these granular predictions can change faster than a chameleon in a disco.
Right. Approaching these with a healthy dose of skepticism is key. They might be handy for those who like to tango with short-term trading, but even a month in the crypto world can feel like a lifetime.
Think of it this way. These predictions are like those funhouse mirrors at the carnival. They give you a distorted, exaggerated view of reality. Entertaining, sure, but not exactly reliable for navigating the actual terrain.
Okay, so we've got these price predictions, But they're just one piece of the puzzle. Now let's get our hands dirty and delve into the world of technical analysis. We're talking chart patterns, indicators, and all sorts of data points that can help us decipher the market's secret language.
It's like being a detective, but instead of dusting for fingerprints, we're squinting at charts looking for clues in the candlestick shadows.
All right, Sherlock, give us the lowdown. What are some of the key indicators we should be paying attention to?
Let's start with the basics: moving averages.
Okay.
They're like a trend compass showing us the average price over a certain period. Traders often look at the 50-day and 200-day moving averages to gauge the market's mood. Is it feeling bullish or bearish?
So if the price is above those lines, it's like getting a thumbs up from the market, right?
You got it. It indicates that buyers are in control and the upward trend is your friend. But if the price dips below those lines, time to proceed with a bit more caution.
Moving averages check. What else should we be keeping an eye on?
The Relative Strength Index, or RSI, is another favorite tool. It measures the speed and magnitude of price movements, letting us know if things are getting a bit too heated or if the market is in need of a breather.
So if the RSI is high, it's like the market is hitting the dance floor a little too hard and might need to take a break, right?
Precisely. An RSI above 70 suggests a potential for a correction, and below 30, well, that could signal a buying opportunity for those brave souls.
Fascinating stuff.
Wow.
We've got our trend compass and our momentum meter. What other gems can we unearth from these charts?
Support and resistance levels are key battlegrounds on the price chart. They're like those stubborn price points where the market just can't seem to make up its mind.
Yeah.
For DYDX, we've got strong support around $2. It's like a safety net for the bulls.
And on the flip side, we've got those pesky resistance levels at $3 and $3.60 acting like hurdles on the track to higher prices.
Exactly. Breaking through resistance often triggers a wave of excitement and buying activity, but failing to clear those hurdles, well, that can send the bears rumbling back into the arena.
Technical analysis can feel a bit like reading tea leaves, but I'm starting to see how it can help us decode the market's whispers.
It's not about predicting the future with absolute certainty, but rather about understanding probabilities, managing risk, and making informed decisions based on the evidence. Sort of like playing poker with the market, only the stakes are much, much higher.
Now, even with all these charts and numbers, we can't forget about the wild card human psychology market sentiment. That collective mood swing of traders and investors can move markets faster than a tweet from Elon Musk.
We're not dealing with robots here. We're dealing with humans driven by emotions, fears, and hopes. News, social media, even a good old-fashioned rumor can send the market spiraling in unexpected directions.
Right. It's like trying to predict the outcome of a reality TV show. You might have your favorites, but there are always unexpected twists and turns that can leave you speechless.
And speaking of unpredictable, let's not forget the ever-evolving regulatory landscape. Governments are still grappling with how to handle this cryptocurrency whirlwind, and their decisions can have a major impact on the market.
It's like trying to build a house on shifting sand. You never know when the ground might move beneath your feet. Which brings us to a crucial topic: risk management. This is not financial advice, of course, but navigating the crypto world requires a good dose of caution and a whole lot of common sense.
Absolutely. One of the best tools in your arsenal is the stop-loss order. It's like setting a safety net for your investments, limiting potential losses if the market takes an unexpected nosedive.
That sounds like a wise move, especially in a market as volatile as crypto. What other strategies should we be thinking about?
Position sizing is crucial. Never put more money on the table than you can afford to lose. And remember, diversification is your friend.
Right.
Spread your bets, don't put all your eggs in one basket. All those classic investing adages still hold true in the crypto world.
Diversification check. And wasn't there something about dollar cost averaging? Remind me how that works again.
It's a simple but effective way to smooth out the ride. Instead of trying to time the market perfectly, you invest a fixed amount at regular intervals, regardless of the price. It's like a slow and steady wins-the-race approach to crypto investing.
Makes sense. It takes the emotion out of it and helps you weather those inevitable market storms.
Precisely. It's about playing the long game, understanding that volatility is part of the deal, and focusing on building a solid foundation for your portfolio.
We've covered a lot of ground in this first leg of our DYDX deep dive. We've examined price predictions, waded through technical analysis, and even dipped our toes into the choppy waters of risk management.
And we've done it all with a healthy dose of humor and a dash of skepticism, because that's how we roll here at the NOSR Webs podcast.
Exactly. But before we move on to part 2, where we'll be exploring DYDX's role in the DeFi space and the challenges and opportunities that lie ahead, I want to leave you with a question to ponder.
Ooh, a question.
Given the potential for both massive growth and significant risk in the crypto market, how do you think DYDX's position in the DeFi ecosystem might evolve over the next decade? What challenges and opportunities do you see on the horizon?
That's a great question, one that we'll delve into further in part 2. But for now, let those mental gears start turning.
And don't forget to hit those links in the description for some fantastic offers that will help you navigate the crypto world like a pro. We'll be back soon with more insights and analysis. Stay tuned.
Stay tuned. Welcome back to the NOSR Webs podcast, where we're continuing our deep dive into the world of DYDX.
And picking up right where we left off, remember that thought-provoking question we threw out?
Oh, yeah.
How might DYDX's role in the DeFi space evolve over the next decade?
Right.
What's lurking on the horizon, both the good and the potentially terrifying?
Because let's be honest, anyone who claims to have all the answers in the crypto world is probably trying to sell you something. We're here to explore the possibilities, not hand out crystal balls.
Exactly. So when we talk about DYDX's role in DeFi, what are we really getting at? What's the big picture here?
At its core, DYDX is all about giving users more control over their financial lives. It's about cutting out those traditional middlemen and letting people trade derivatives and other financial products directly without needing permission from anyone.
So as part of this grand experiment in decentralization, a financial system that's more open, transparent, and accessible, but are we really talking about a future where we're all trading crypto derivatives on our phones while sipping our morning coffee?
Well, that's the million-dollar question. The truth is we're still in the early innings of this DeFi game. DYDX is pushing the boundaries, experimenting with new models and technologies, but mainstream adoption is still a question mark.
It's like we're in the Wild West of finance, only with better internet access. A lot of potential, a lot of innovation, and a whole lot of risk.
Exactly. And that's what makes it so fascinating. But let's not get carried away with the hype just yet. There are some serious challenges that DYDX and the entire DeFi space needs to overcome before we're all trading crypto over breakfast.
Okay, so let's talk about the roadblocks. What's standing in the way of DYDX achieving world domination?
World domination. Right, well, scalability is a big one. Can these decentralized platforms handle the massive volume of transactions that we see in traditional financial markets? Can the technology keep up as more users flood in?
Right. It's like trying to fit a whole stampede of bulls onto a tiny little trading platform. Something's got to give.
Ethereum, the blockchain that DYDX calls home, has been working on scalability solutions, but it's an ongoing process. Think of it like road construction on the information superhighway necessary, but definitely causes some delays.
Okay, so scalability is a hurdle. What else is tripping up DYDX?
User experience is another biggie. Right now, let's be honest, DeFi can be intimidating for the average person. It requires a certain level of technical know-how, a willingness to wrestle with crypto wallets and private keys, and a high tolerance for cryptic error messages.
Yeah, it's like trying to assemble furniture from those instructions written in a language you don't understand. It's frustrating to say the least.
Exactly. If DeFi wants to go mainstream, it needs to become more user-friendly, more intuitive. It needs to be as easy to use as your favorite online shopping app, even if what you're buying is a complex financial instrument.
So we've got scalability and user experience as two major challenges. And let's not forget that elephant in the room we mentioned earlier, regulation.
Ah, yes, the regulatory landscape ever-shifting and often shrouded in mist. As DeFi grows, regulators around the world are taking notice, trying to figure out how to apply those old-school financial rules to this new decentralized world.
It's like trying to fit a square peg into a round hole. DeFi is designed to be decentralized outside the control of any single entity. That's kind of the whole point.
Precisely, and that creates a lot of tension. Some argue that heavy-handed regulation will stifle innovation and kill the DeFi dream before it even gets off the ground. Others say that clear rules are needed to protect investors, prevent fraud, and ensure stability.
It's a delicate balancing act, finding that sweet spot between fostering innovation and protecting users. But it's a conversation that needs to happen.
Absolutely. The regulatory landscape is going to be a major factor in shaping the future of DeFi, whether we like it or not.
Okay, so we've got scalability, user experience, and regulation, three formidable foes standing in DYDX's path. But let's not forget about the potential upside. If DeFi can overcome these hurdles, the possibilities are pretty mind-blowing.
The opportunities are massive. Imagine a world where you can borrow and lend money without going through a bank, where you can access investment opportunities that were previously only available to the Wall Street elite, where you have full control over your financial data and your digital assets.
It's like a financial revolution, putting the power back in the hands of the people. No more shady bankers, no more hidden fees, just a transparent and equitable financial system.
That's the utopian vision, at least. And DYDX is well positioned to capitalize on this potential. Its focus on derivatives, trading is a smart move. Traditional derivatives markets are huge, but often complex and opaque.
Yeah, derivatives have a bit of a reputation like the financial equivalent of that mysterious dish on the menu that you're not quite sure what it is.
Exactly, but DYDX is trying to demystify derivatives, making them more accessible and transparent to a wider audience. It's like they're creating a derivatives cookbook for the masses, explaining the ingredients and the risks in a way that everyone can understand.
So it's about democratizing access to sophisticated financial tools, giving everyone a seat at the table. That's a powerful idea.
And it's attracting a lot of attention. DYDX has already built a strong community of users and developers, and that community is only going to grow as more people wake up to the potential of DeFi.
It's like a snowball rolling downhill, gathering momentum as it goes. But let's be real, even with all this potential, there are no guarantees in the crypto world. Success is not a given.
Of course not. This is a high-risk, high-reward game. But that's part of the allure, isn't it? The thrill of the unknown, the possibility of being part of something truly transformative.
Okay, so we've talked about the challenges and the opportunity, the potential triumphs and the potential pitfalls. But let's circle back to those price predictions. After all, that's what brought us here in the first place.
Right. Let's see how those predictions align with our newfound understanding of DYDX's role in the grand DeFi experiment.
Remember those long-term forecasts? Some analysts are calling for DYDX to hit $29.58 by 2030. That's a number that could make even the most jaded crypto investor crack a smile.
It's a bold prediction, to be sure, but it's not entirely out of the realm of possibility. If DeFi takes off the way some people believe it will, if regulation becomes more supportive, if DYDX continues to innovate and attract users, then yeah, those lofty heights might be within reach.
But it's a big if, right? A lot of things have to go right for DYDX to reach those astronomical levels.
Absolutely. We're talking about a confluence of factors, a perfect storm of positive developments. It's not impossible, but it's definitely not a foregone conclusion.
And let's not forget those month-by-month predictions from Changelly breaking down the price action with laser focus. Those granular forecasts can be tantalizing, especially for those who like to play this short-term trading game.
But they're based on the assumption that past patterns will continue to repeat themselves, and as we all know, the crypto market has a mind of its own.
It's like trying to predict the weather based on last year's almanac. You might get lucky sometimes, but Mother Nature always has a few surprises up her sleeve.
Exactly. The crypto market is constantly evolving. New trends emerge, new technologies disrupt the landscape, and unexpected events can throw everything into chaos.
So how do we make sense of it all? How do we reconcile those long-term predictions with the short-term noise?
It's about taking a holistic approach, considering all the pieces of the puzzle, the technical analysis, the market sentiment, the fundamental factors driving DYDX's growth, and the broader trends shaping the DeFi space.
It's like being a detective, piecing together clues from different sources, trying to build a coherent narrative out of the chaos.
And even then, there will always be an element of mystery and unsolved case. But that's part of what makes the crypto world so captivating. It's a journey of discovery, a constant exploration of the unknown.
Speaking of uncharted territory, are you ready for another brain-bending question as we gear up for the final part of our DYDX deep dive?
Hit me with it. I'm always up for a challenge.
All right, here it is. Given the breakneck pace of innovation in the crypto space, what emerging technologies or trends do you think could have the biggest impact on DYDX's future? Could they be a boon or a bust?
Ooh, that's a good one. And a question that deserves its own episode. Luckily, that's exactly what we'll be tackling in part 3.
So stay tuned, folks. We're about to dive even deeper into the rabbit hole, exploring the forces that will shape DYDX's destiny.
And don't forget to check out those links in the description for some incredible offers that will help you navigate the crypto maze like a seasoned pro.
We'll be back soon with more insights and analysis. Don't touch that dial. Welcome back to the NOSR Webs podcast, where we're wrapping up our deep dive into the world of DYDX. Remember that cliffhanger we left you with?
Oh, yeah.
We were just about to explore the emerging technologies and trends that could reshape the DYDX landscape.
It's a topic that keeps even the most seasoned crypto veterans awake at night, wondering if they'll wake up to a brave new world or a digital apocalypse.
Well, let's hope for the former. So what's on the horizon? What are the potential game changers we need to be aware of?
One word, layer 2 scaling solutions. Think of them as the express lanes on the blockchain highway, helping to bypass the traffic jams and speed up transactions on the Ethereum network.
So they're like the superheroes of the crypto world, swooping in to save us from those dreaded transaction fees.
Exactly. And lower fees mean a smoother, more enjoyable user experience, which is crucial for attracting mainstream adoption. No one wants to feel like they're paying a premium just to participate.
Right. It's like going to a concert and realizing the service charges cost more than the ticket itself. Not exactly a recipe for a good time.
Precisely. So if DYDX can successfully integrate these Layer 2 solutions, it could significantly improve its appeal and attract a wider audience.
Okay, Layer 2 scaling check.
Yeah.
What else is bubbling in the cauldron of crypto innovation?
Another trend to watch is the rise of decentralized autonomous organizations, or DAOs for short. These are essentially communities that govern and manage projects using blockchain technology to make decisions in a transparent and democratic way.
So it's like a digital co-op, but for crypto enthusiasts.
That's a great way to put it. And some believe DAOs could play a huge role in the future of DeFi. Imagine a DAO governing DYDX, making decisions about new features, upgrades, and even the distribution of rewards.
It sounds like a bold experiment in decentralized governance. But let's be honest, getting a large group of people to agree on anything can be like herding cats.
It's not without its challenges, that's for sure. But DAOs have the potential to create a more inclusive and community-driven model for DeFi. And that could be a major differentiator for DYDX, fostering loyalty and engagement among its users.
So DAOs, potentially messy, but potentially revolutionary. Got it. What other trends should we be keeping an eye on?
Well, we can't ignore the elephant in the room, or rather the metaverse in the room. The lines between the physical and digital worlds are blurring, and that's creating some interesting opportunities for DeFi.
Okay, so I'm picturing myself in a virtual reality world trading crypto derivatives while sipping a virtual cocktail on a virtual beach. Is that the kind of future we're talking about here?
Maybe. But on a more serious note, the metaverse could create new ways for people to interact with DeFi platforms, making them more engaging and immersive.
Interesting. So instead of staring at charts on a screen all day, we could be exploring virtual worlds, interacting with other traders, attending virtual conferences. It sounds like a whole new level of gamification for DeFi.
Exactly. It's about making DeFi more accessible, more engaging, and more fun.
Okay, so we've got faster transactions with Layer 2 scaling community governance with DAOs and immersive experiences in the metaverse. Any other futuristic trends we should be aware of?
There's one more that's a bit of a wild card: quantum computing. It's a field that's rapidly advancing, and it has the potential to revolutionize many industries, including finance.
Quantum computing. That sounds like something straight out of a science fiction movie. How could it impact DYDX?
Well, quantum computers are incredibly powerful. They can solve problems that are currently impossible for classical computers to handle. And that raises concerns about the security of blockchain networks. Some experts believe quantum computers could eventually crack the encryption that protects cryptocurrencies.
That doesn't sound good.
It's definitely a potential threat, but it's not an immediate one. And the crypto community is already working on developing quantum-resistant cryptography to counter this threat.
So it's a technological arms race. The good guys versus the quantum bad guys.
In a way, yes. But it's important to remember that quantum computing is still in its early stages. It's not clear when or even if it will pose a real threat to blockchain security.
Okay, so it's something to keep an eye on, but not necessarily a reason to hit the panic button just yet.
Exactly. The crypto world is constantly evolving, adapting to new challenges and opportunities. That's part of what makes it so dynamic and exciting.
Well, we've covered a lot of ground in this DYDX deep dive, from price predictions to technical analysis, from the current DeFi landscape to the potential disruptions on the horizon.
We've explored the challenges and the opportunities, the risks and the rewards, and hopefully provided our listeners with a solid foundation for understanding this complex and ever-changing world.
Absolutely.
Yeah.
But before we sign off, I want to remind everyone that this is not financial advice. Always do your own research, invest responsibly, and never forget to manage your risk.
And most importantly, stay curious. The crypto world is full of surprises, and the best way to navigate it is with an open mind and a thirst for knowledge.
Well said. A huge thank you to our listeners for joining us on this DYDX adventure. Don't forget to check out those links in the description for some amazing offers that will help you level up your crypto game. Until next time, happy trading.